Monday, I shared my thoughts about the Brexit, the British exit from the EU, and what it might mean. That was theory, and now that the vote is over, let's look at the facts. On Thursday, it looked like Britain would remain in the EU, and the markets rallied worldwide, but as the hours rolled on after our markets closed and all the votes were counted, it became clear that Britain was going to leave the EU. Now, as of today, the time I'm recording this, world markets have done very poorly, and our own indexes are getting, a bad day as well. Not quite as bad as what's happened overseas, but still not a good day. As I shared on Monday, some people predicted that a British exit would tank financial markets and bring on a European recession. The markets aren't doing great, as I said, and a recession could happen, but it's way too early to know for certain how this is going to impact long term. And anyone who predicts what that's going to be like over the very long term, many, many years to come, they're just guessing, and quite frankly, they should know better than doing that. In reality, as I said, these kinds of things have unintended consequences, both good and bad, and it takes a long time to really understand what's going to happen. It's an important event, but let's take a look at some facts. First, the UK voted to leave. But it's not as if trade agreements lapse overnight. It could take anywhere from 2 to 10 years to fully disengage from the EU. And since Britain has to give 2 years' notice, it won't leave the Union until 2018 at the earliest. Is Britain going down the tubes? I don't think so. 50% of all British exports go to the EU. And trade is a two-way street. Both sides benefit by continuing to trade with each other. So there could be some new trade tariffs imposed, but it won't be a disaster for either side. The exit will allow Britain to negotiate their own trade deals globally, and this is especially important for countries that do business with Britain outside of the EU, because they'll be able to deal with Britain directly as opposed to having to go through the bureaucracy of the EU. The European Union was a huge deal for Britain in 1973, but now they have much more pressing issues like productivity. And this exit from the EU could help Britain combat that problem. As far as the British economy goes, there are negatives, but I think right now they're being overstated. And there are also some potential benefits, and those might be being overlooked. Time will tell. How about worldwide? As I said, markets are getting chewed up today, partially because most people predicted that the vote would go the other way, and the surprise and uncertainty is showing up in lower share prices, and that's also happening in commodities such as oil. In the United States, American companies get 9% of their profits from affiliates in the UK. And the Brexit could jeopardize those affiliate earnings of many of those companies in the short term. Also, UK's departure from the EU could potentially hurt European banks' emergency cash reserves, and that could create liquidity problems because they won't be able to count the British reserves as part of their own reserves, so they could have some problems. The British pound and the euro are falling right now, and they could continue to fall and make the dollar stronger. That could hurt U.S. exports. This is not great news. It could keep our interest rates low for some time. Now let's take a summary of what's gone on. Much of these problems will take a long time to manifest if they do at all. But there are so many moving parts, and it isn't happening in a vacuum. Other things counteract. As I said, there's unintended consequences. Some of those could be good. But the problem is, over the short run, investors are reacting as if it's all happening right now. But it's not. So now is not the time to overreact. As I said earlier, our economy, which is where our money is invested, is much more insulated than Europe. We could be a safe haven for money that flees Europe as a result of this event. So we have to remain prudent, and we have to remain awake, and we have to remain ready to make adjustments to our portfolios. I'm on that, and you know I am. If you have any questions, call the office. We'll arrange a time to meet, either in the office or on the phone. I'd be happy to discuss this with you further. In the meantime, have a great weekend, and I'll connect with you soon. Thanks.